The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, friends. Welcome to another edition of Breakout Investing on TFNN. Happy Monday to you all. 877-927-6648. That's the number to use if you want to talk to me live about this market. We're going to be going for the next hour or so feel free to give me a call. My show airs daily on TFNN from 3 to 4 Eastern. If you can't listen to the show live, no worries. You can pick it up as a podcast on iTunes. And don't forget, you can listen to all TFNN programming on your smartphone. Just plug those earbuds in, open your smartphone browser, type in tfnn.mobi. Easy as pie. You can listen to the stream 24/7. that way. And if you want to look at charts live right along with me on the program, you can use Tiger TV to do that. That is also viewable on your handheld device as well. But if you're at your PC working, go to tfnn.com. Tiger TV is located on Channel 1. The show is carried live on Channel 1. It is archived in Channel 13. Start by taking a look at the Dow Jones Industrial Average today, up near session highs. That's a good thing after a bearish session, not only for the Dow, but for the S&P 500 and NASDAQ on Friday. We did get volume come in lighter than Thursday on Friday, so that was really the only silver lining to Friday's session, which was decidedly bearish, but good to see indices today trading up near session highs after early weakness. All three major averages trading in a relatively tight range today. The Dow right now up 11 points to 13,104, only about 2 points from its intraday high. Let's take a look at the S&P 500, see where we're at here. S&P 500 up near its session high, up close to 2 points to 1416, trading very, very close. So I'm pretty much at its session high. And the NASDAQ composite, let's see what the tech index is doing. Of course, all the institutional selling that we've seen in the market since late September has really been seen mostly in the NASDAQ composite. It has been in the S&P 500 as well, but selling most pronounced in tech stocks in recent weeks. The NASDAQ composite trying like heck to hold on to its 200-day simple moving average here. It is up 14 points, outperforming today to 29.96, the last for the NASDAQ composite. Volume today tracking about 15 to 20% lower than what we saw Friday. In the market, volume Friday on the NASDAQ, 1.78 billion shares. So we're 15 to 20% lower than that right now. Volume Friday on the New York Stock Exchange, 785 million shares, also 15 to 20% lower than that today. So even though indices are up near highs, really not a whole lot of conviction behind the buying. Even if we were near lows and slightly lower on the day, there's really not much conviction behind the selling either. Just sort of a low volume session today. Taking a look, let's start by looking at the dollar at currently at 80.75, up 15 ticks today. Let's check in on that U.S. dollar index. The U.S. dollar index on Friday had a pretty nice day here, up. It was up 55 ticks to 79.86, and you can see it closed just underneath its 200-day moving average at 80.63. So the 200-day line, 80.63, it closed at 80.59. And the fact that it's at 80.75, it has cleared a fairly significant resistance level today. Now, just because the dollar is strengthening here, it doesn't automatically mean that the stock market is doomed. Of course, the stock market likes a weak dollar. It tends to move higher when the dollar is weak. But again, you've got the dollar near highs today. You've also got major averages near highs. So there's a pretty good correlation there, but it doesn't always hold. And even if the dollar strengthens here, you can't put it past the market to rally between now and the end of the year. Of course, we've got the election tomorrow and a new president, or we will wake up to a new president Wednesday morning. Apparently there's an election in China this week as well. So the dollar strengthening again today. It has cleared a significant resistance level at 80.63. We'll see where that takes us. The yield on the 10-year note down a bit today to 1.68%. The 30-year bond currently at 2.87%. I am watching the TLT here. This is the iShares Barclays 20-plus year Treasury bond fund. You can see the TLT has made a series of lower highs here. Series of lower highs. That typically tells you that whether it's a stock or an ETF or even an index, a stock index, it's pretty clear indication that buying demand is drying up. So the TLT does not technically look all that healthy to me. So again, the concept of money continuing to move out of the bond market here and into the stock market, it just can't be ruled out. It is a possible scenario that market bulls certainly would like to see, and if you're bearish on the market, it is a scenario that is worth paying attention to here, because you look at the TLT, it does have some pretty serious overhead supply to work through here, and again, the fact that it's been making a series of lower highs is troublesome from a technical perspective. Also wanted to take a look at the UUP. Mentioned the fact that the U.S. dollar index, recently, it is now trading above its 200-day moving average. The UUP, which is basically an ETF that's comprised of a bunch of long U.S. dollar contracts, it is working on 3 straight days of gains here. It still could face some resistance at the 22.27 level, but the UUP did recently break out over 21.96. So this is a breakout again from deep inside of a base here. Still has resistance at 22.27 to deal with. The UUP recently trading around 22.11, up about 5 ticks on the day. So a lot of different market dynamics working here. Mentioned that tech stocks have been weak. Let's check in on Apple. We did get some data from Apple today. Company said it sold 3 million iPad minis and 4th generation iPads since Friday. Those are pretty good numbers, but Apple's just not responding to good news. And just now, we've been talking about what's behind all the recent price weakness in Apple, and I raised some possible scenarios. Finally starting to see some headlines, yesterday and today, people finally starting to talk about it. But this is a company that arguably, it is so mature. I think a good argument can be made that this company is past its best years of growth. Doesn't mean that it's not going to be able to grow annual earnings by 10% or 15%, something like that. But when you see a correction as sharp as what Apple has gone through since September, $700 stock now down to $582, and it took out its 200-day moving average with conviction on Friday. Volume wasn't huge, but it did rise sharply from Thursday's level, and you can see these big red volume bars in the chart here. This is unequivocal institutional selling. So you have to ask the question, why are institutional investors selling? Are they taking profits because Apple has been a big bull market leader since the start of the bull in March 2009? That's probably part of it. But I think there are other fund managers that realize that, if earnings growth drives price performance, what is the likelihood that Apple is going to be able to achieve the earnings growth that investors have become used to? And I just don't see the company doing it. And that's my take. You've got the iPad Mini, you've got some new products that are probably going to be coming out, but it's a stock that's just flat out not acting right here. So not a name that I'm interested in owning at the moment. So you can see Apple broke below its 200-day moving average on Friday. It is up $5.81 today, 1% to $582.61. We'll see if it's going to be able to get back above that 200-day line currently at $589.41. Significant resistance at the 654 level, which is its 50-day moving average. There was some interesting data today from IDC. This is a market research firm that showed that Apple's tablet market share in the third quarter fell to 50.4%. That was from 59.7% a year earlier. In the second quarter, Apple's tablet market share was 65.5%. So 65.5% market share in the second quarter drops all the way down to 50.4% in the third quarter. It's still the top maker of tablet computers market share wise, but Samsung is number 2. Its market share at the end of the third quarter rose to 18.4% from 6.5% a year ago. Amazon number 3 with a 9% market share. Suffice to say that Apple is a company with many, many, many challenges ahead. It's going to be difficult for this company to execute. Obviously, they can innovate. They can bring new products to market quickly. But what going forward is going to be as big as the iPhone, as big as the iPad? These products are. Were big hits for the company. I think there are serious questions right now that, is Apple going to be able to continue to innovate? So, all right, enough on Apple. I just find its price action over the past several weeks very, very interesting. 877-927-6648. Let's go to our first call of the day. Chris is at New Boulder, Colorado. How you doing today, Chris?
I'm pretty good. I was going to ask about, I was going to be on with David and ask about MindSpeed. It's M as in Mary, S as in Sam, P as in Paul, D as in David.
MindSpeed, yeah, MindSpeed. Yeah, it's a kind of an interesting technical setup here. Are you thinking about buying it, or do you already own it? What are you doing with it?
This is a dangerous thing to do, but I've had this kind of a little romance with it, and that's something you should you do that with a stock?
Well, it depends. It depends if it's making you a lot of money, and I've had some great romances with stocks that have been very rewarding, and I've had also stocks that I've owned that haven't done what I expected them to do, and I refuse to let that romance go on any further. So I'll tell you what, Chris, you mind hanging on the line? We're going to head into break. We'll come back, talk about MindSpeed, okay?
Okay. Cool.
All right.
Yeah.
Sit
Cool.
tight. All right.
Thank you.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you. Chris is still on the line from New Boulder, Colorado. Wanted to talk about a company called Mindspeed Technologies. Small company, but in an interesting technical setup. So, Chris, before we went to break, you're talking about a stock that have you owned it numerous times in the past? Have you been a long-time holder?
I was when I was a little baby, when I was trading $1,000 at a time of my inheritance, then I got lucky with it once. It was a 20% return. It was on earnings. And can I just say one thing? Can I make a shout out to Zital? I just did.
Sure. That's fine. The only thing I would say about Mindspeed Technologies is that it's still under resistance at $4.12. It's currently trading around $3.77. So if it continues higher here, it looks like its 200-day moving average at $4.12 could be a pretty stiff resistance level. So you do have a stock that's trying to break out from deep inside a base here, breaking out over $3.50, $3.75 a share. But that $4.12 area looks like it could be a ceiling. The other thing I'm a little cautious on about Mindspeed is declining sales growth in recent quarters. When I buy stocks, I like to see meaningful earnings and sales growth and that type of thing. So technicals look okay, fundamentals not so great.
Well, when I look at when I look at something that's high flying, I'm always afraid that when are they going to fall? And I have this thing of, trying to pick the underdogs, and sometimes it works and sometimes it doesn't. And,
yeah. I mean, I typically, for my ultimate growth stocks model portfolio, I tend to look at stocks that are up closer to highs, not necessarily at 52-week highs, but at least stocks that are within 10 or 15% from a high. MindSpeed, has been beaten down. It's been rallying nicely, but you're still looking at a stock that's like, 50% off its high. So not exactly my cup of tea, but, daily chart does show a stock that is starting to, move a little bit, but I just don't see the chance for meaningful gains from here. So.
Okay, good.
All right.
Do you, let me see. What was I going to ask you? What was I just going to ask you? I mean, everybody has their own thing about stocks, and I've just been trying to learn it for 2 years. And what do you do? How do you trust a stock? I mean, how do you? I mean,
to tell you what,
it can be a high flyer and it can fall.
Tell you what you take 30 days free of my newsletter, and you'll see exactly how I cover this market, because I buy strong stocks. You try it 30 days for free, and you can check out how I do things. Okay, buddy?
Okay, I
All right,
need to
Chris.
let you go.
All right, thanks.
Okay.
Have a good day.
Thanks, man.
All
Thanks.
right. Yeah. All right, Chris from New Boulder, Colorado. Wanted to talk about MindSpeed Technologies, and listen, it's a decent daily chart, but not really showing meaningful signs of accumulation. Fundamentals very suspect. It's a $3.80 stock, about 50% off its high. So, in the universe of stocks that I cover, much better fish to fry out there. All right, talking about Apple before we went to break. Enough said about Apple. Got some other large cap tech names under pressure today, at least at one point. Let's check in on share of Google. Very, very disappointing earnings. Remember, Google kicked off third quarter earnings season. Didn't technically kick it off, but it announced earnings right after IBM, and they were very, very disappointing. Caused a huge bout of institutional selling in the stock back in October. Now it's just kind of sitting underneath its 50-day moving average, down another 1% today to 680.77. At the very least, this looks like a stock that's ready to base, consolidate gains, take a breather. If this market were to make another leg down here, and since we're not in a confirmed uptrend yet, that's a distinct possibility. Google could ultimately pay a visit to its 200-day moving average right around that 635 area. So I would not be a buyer of Google here. Other names under a lot of pressure. Remember, everybody was talking about the growth at Salesforce, and this is a company that growth prospects are still very, very bright. But Salesforce trying to hold on to its 200-day moving average, just like the Nasdaq composite. And remember that great earnings report from LinkedIn yesterday didn't mean much in this market that is under distribution. It is off its lows, but flirting with its 200-day moving average as well. Shares of LinkedIn recently trading around 107.24. All right, Nick in Clearwater, Florida. You came in there right at the end. I'll come to you when we come back. Sit tight. We'll be back in about 3.5, 4 minutes. You're listening to Breakout Investing on TFNN. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. A little less than 30 minutes left to go in Monday's session. 877-927-6648. Let's first go to Dick in Clearwater, Florida. Wants to talk about a home builder. How you doing today, Dick?
I'm doing fine. How are you, Steve?
I'm great, thank you. So what do you got going on, Dick? MDC, you own this stock. What are you doing with it?
No, I do not. I've read the book several times, and I listen to you guys quite a bit. And according to Will, in his book, I read upon a author that dealt with turnaround stocks. And also in the paper today, or this weekend, God behold, there's an article in here about turnaround stock, which was the MDC.
Okay.
And I'm looking at it on a chart here, and it seems to me like it might be in a flat base for about 6 or 7, 8 weeks, maybe.
Yeah, I mean, the home builders have been running. They've been running for a while now. MDC did hit a high of 41.29 back in September.
Yeah. And
it was in the process. It looked like it was forming. You're right saying it was forming a flat base, but unfortunately, last week it had a very bearish day of price action on Friday, which to me has really screwed up the stock's technical picture. So I'm not a fan of MDC's chart here. Fundamentals are good. They had a pretty darn good earnings report. I think it was just last week they reported, if I'm not mistaken. But technically this stock is a little bit questionable here. And it's solely because of that very bearish day of price action on Friday, when it hit a high of 41.34 and a low of 37.20. So it had this big, wide, a little better than 4-point intraday spread, and there was some juice behind that selling, and it's rallying back today, but volume is much lighter than what we saw Friday. So the home builders in general, Dick, what I would say is that they've been running since late July. Right. And I really need to see at this point a constructive pullback in this group before I'm going to be interested in getting back in. So I'm kind of watching and waiting with the home builders, and I'm just not really eager to chase them up here.
Okay, so would it be wise to just keep an eye on MDC here and see if it holds at these lows?
There's a great, the ITB is an ETF that I talk about, the iShares Dow Jones U.S. Home Construction Index Fund. Picking individual home builders, you can do it. And there's a lot of them out there that are really, in nice turnarounds in terms of recent earnings and sales growth. But the ITB, for example, a much better chart, for example, than MDC. It's but the thing is, again, here's an ETF that's been, basically the last breakout you had there was in late June, early July, and it's been kind of bouncing off its 10-week moving average. So it looks to me like even the ITB and most home builders have just run so much, they really need to kind of correct in price, 5, 10%, 15%, form good bases, and then start working their way higher again.
All righty.
Okay?
Okay, thanks, Steve.
All right, thank you, Dick. Appreciate it.
Right.
Everybody likes to call me Steve because my last name is Shreve. Ken Shreve, so they say Steve a lot. That's okay. I've been hearing it my whole life. No big deal. All right, next up, we're going to go to West Palm Beach, talk to Frank. He wants to talk Seagate Technologies, I believe. How you doing today, Frank?
You ever get that sinking feeling when you said you should have got out, but you never got out because you got advice?
Yeah, I've had that feeling. I think everybody that's been in this game for any amount of time has had that feeling.
I had talked to Steve and Basil, and everybody looked positive that STX was going down to 14 and 50, and I'm down $480. I hung out. I should have got out at $100 in this put.
Well, so Seagate Technology is right now. It's and I know some of these guys on the network don't use moving averages as much as I do, but I mean on the bright side, Seagate is firming up at its 200-day moving average. So you want this to head lower? I
got the January 13/28 put. And
okay.
I just saw it go from, I was down $100. Now there was $200. Now I'm down $400.
Okay. So when it got down to about 27, you were a little under 27. You were feeling pretty good, and then on the Thursday it had a big day, and it was down Friday. Yeah. Now it's up about 3% or so today. So, you have a stock that's kind of firming up at its 200-day moving average here. So, it's showing pretty good supporting action. If it, I don't know if you want to wait around for this thing, but if it goes up to 30, that's going to be watching a small loss get bigger. But I suspect this is a name that's probably going to meet with some pretty stiff resistance at that $30 price level. So, if you want to stick with it, I mean, can you sell half of it? And
oh no, see, I got January. January. It's not like it's going to die tomorrow,
Yeah, it doesn't look to me. I mean, to give you just a short, concise answer here, it doesn't look to me, unless this market really rolls over in spades over the next few days, which it could happen, but I'm not I can't really, pull out my crystal ball. The fact that it's firming up and finding support at its 200-day moving average means you might want to cut it loose.
Yeah, you think it's going up to 30? Yeah, you're right. Yeah.
It could go to 30, pretty easily, which is only about 1.25 points from here. But
right, exactly.
Still, in your put position, that's your $400 or $500 loss is probably gonna could potentially go to what, $700-800? I don't know.
Well, yeah, and then again after I sell it, then oops, there it goes back down to 27.
Yeah.
That's because everybody was saying, Steve, all of the people were saying, look, Seagate doesn't look good. It looks like it's headed down to 23. That's what they were all saying.
When you look back, I'm still seeing a lot of higher volume declines in the stock. I mean, it is a stock that's under distribution,
right.
Okay, and it's a stock that's under distribution, and it's a stock that even when it's moving higher, for example, today there's just no volume behind the move. So you have a stock. It's kind of a tricky call here, man. It's never easy, but you have a stock that is finding support at the 200-day moving average, yet it's not showing anything in the way of meaningful accumulation here.
Exactly.
So it's never an easy call, but and when I'm frankly, when I look back at the higher volume decline it made on October 12th, it finished all the way up near its high. I look at a higher volume decline it made on October 23rd, it finished up near its high, and then last week volume picked up again, and it didn't close near its high, but it closed in the top half of its range. So it just I just don't know that there's more meaningful downside ahead here.
Yeah, there's not more meaningful downside.
Yeah.
I could get half of it back and then bail out when I get half of it back.
Yeah.
Anyway, we're looking at the other liar, Netflix.
Netflix?
Yeah, I wonder what this Carl Icahn said something, and then Microsoft said something. So let's see. I'm hanging on in there with a January 1365 put.
Yeah, well, I mean, this after the big move it made last week on that 10% Icon investment, it's holding on to a lot of its gains. Again, 82 looks to be pretty significant resistance for Netflix right now. It's at 78.73. In fact, when it made that big move last week, it tried to get over that 82 price level, but was turned away. It is holding on to most of its gains that it made from last week, but again, 82 looks like pretty good resistance for Netflix at this point.
Yeah, and then you never know. I think I'm going to hold on to that put because Netflix is so iffy. Next thing you know, it's headed on the way south.
Well, this one, as you can tell by its daily chart, it's really been trading all over the place lately. It's a tough one to handle for sure.
Yeah, I think I'll hang on to that. Last question I want: XLE. You think I should get the calls on that? That's about time to go head up in the right direction.
No, XLE, the Energy Select Sector Spider Fund, sitting below its 50-day moving average here. Doesn't look. This is again. It's trading at 71.71. The fact that it's starting to live underneath this what was formerly support, 73 looks like resistance here. So I don't see any signs that this is ready to start a meaningful uptrend anytime soon.
Right. So you think you go down to 70 or 69?
Well, 70, it looks like a pretty defined range here. 73 resistance, support at 70.
Well, thank you so much.
Okay, thank you. All right. Thanks to Dick in Clearwater, and Barb has been hanging on patiently in the beautiful state of Washington. How you doing today, Barb?
That's fine, thank you. I'd like to know the entry point for POL and KORS if you have time.
Okay, well, I'm a big fan of cores. I have cores in my Ultimate Growth Stocks model portfolio. Poly One, this is a chemicals, plastics firm. What you have with Poly One, Barb, is a very constructive technical breakout over 1753. So I know some people that got into that stock when it actually gapped up and broke out over that swing point of 1753, but you're looking at a stock that, even though it's holding on to gains nicely, it is a little bit extended. So I'd be careful about chasing it up here. What I do like about it so far this week is that it's after the big move that it made last week, it's holding on to when it made a big move on Thursday, and then Friday it didn't give up any ground, and today it didn't give up any ground either. So if it can just move sideways, you may be able to buy it over 20, but let's just let it consolidate for about a week or so. I wouldn't chase it right now, but if it holds on to those gains for the rest of this week and then moves again in heavy volume over 20 next week, maybe you could nibble a little bit.
Okay, great.
Okay.
And what would you use as support for cores?
Well, Coors is sitting just above its 50-day moving average here. Let's take a look at Coors here. This is a stock that I've owned off and on. I really think this one has the potential to be a market leader over the next couple of years. I didn't like its price. There were so many stocks on Friday that showed just the ugliest price action you could have seen, and Coors, like just about every other stock, reversed and finished near its session low. It is up 35 cents today to 56.55. Its 50-day moving average is at 53.99. Call it 54, and that looks to be pretty good support at this point. Barb, if you've been listening to the show, this is a market that's still under distribution, meaning that the market is not in an uptrend yet, and that makes any new buy pretty risky. So any buys that I've been doing over the past week or so, I have very, very tight stops in place. So for now, the $54 level for Coors looks like pretty good support. It's about $2.50 above that support level right now.
Okay, thank you very much.
Okay, Barb, thanks for the call as always. All right, appreciate those phone calls. That's the bottom line, though, about this market is that we are still in a downtrend. In fact, let's go ahead and check in on the markets here. We've got a little less than 15 minutes left to go in Monday's session. We've got the Dow still up near its session high, up a little more than 37 points to 13,130. Again, not much volume behind the move in the major averages today. Nice to see them up near session highs, but again, volume at last check was tracking about 15 to 20% lower than what we saw on Friday. And it's not like Friday's volume was all that heavy. Actually, volume Friday came in lower than Thursday. So not much conviction behind the buying, but we do have the Dow up near its session high. S&P 500 also up near its session high, up about 5 points now to 1419, and the NASDAQ Composite up near its session high, trying to hold its 200-day moving average here, up 21 points now, 0.7% to 3,003, back above that 3,000 level. Wanted to take a look at ISRG. I'm starting to watch Intuitive Surgical here. It made a nice move during the month of October. It hit a high right around 550 a couple weeks ago and has been mostly holding on to its gains here. Stock is down 22 cents today to 541.25, but I wanted to take a look at its weekly chart because it is a good example of a interesting setup here. It is forming a handle area right now. It's been working on the handle area for a little more than 2 weeks. Swing point of 551.93. Can't rule out a heavy volume breakout for Intuitive Surgical. Sales growth has been kind of slowing in recent quarters, but still innovative company with an innovative product. All right, coming back for our final segment, folks. You're listening to Breakout Investing on TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Folks, don't forget, if you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com in the breaking news area. In red letters, it says Try Ultimate Growth Stocks. You can't miss it. I'll be publishing my next weekly update tomorrow morning, and in between weekly updates, I send out email buy and sell alerts for the model portfolio and also general market updates. Taking a look at gold today, up $8, finished at 1,600 and oh shoot, did I have a typo here? $1,682. Let me see if I can find that final close here. I think it was 1682.30, 1682.30 an ounce, up $8. I'm not gonna quit until I find that. Okay, well, anyway, crude oil, $85.65 a barrel, up 79 cents. Take a look at shares of Transocean. They reported earnings before the open today. The rig operator, big day for rig, up 5.5% to 48 $1.59. They made $1.55 a share, reversing a loss of 28 cents in the year-ago quarter. $1.55 was almost double the consensus estimate of 76 cents a share. So big report from Rig. Sales were up 23% from a year ago to $2.4 billion, pretty much in line with expectations. After the close, EOG Resources. This is an oil and gas producer. Not looking too bad here, up 1.4% to 116.78. EOG has a decent looking chart here. It's a liquid stock, market cap of $31.5 billion. Average daily volume 1.65 million shares, but you have a swing point here of 119.69. So better than expected earnings from EOG. And you could see a technical breakout for this stock. We'll see what EOG has to say after the close. Also wanted to take a look at Zillow. Remember Zillow, growth prospects still very bright for this company, but man, this thing has just been taken apart. Makes a move from $46 a share back in September. It is down 5.4% today to $34.31 last on Zillow. Earnings after the close today expected to be up 75% to 7 cents a share. Sales up 66% to $31.7 million. Zillow is a small cap stock. It's fairly liquid with an average daily volume of 1.2 million shares, but this is a broken stock, and it's a broken stock because institutions have been dumping shares. So this is strong growth prospects notwithstanding. I don't like the look of Zillow at all ahead of earnings after the close today. How about the selling in the mortgage service providers? ASPS, remember Altisource Portfolio Solutions? It's actually rallied back with the market here. It hit an intraday low of $100.75, now trading around 107.84. Still holding above its 50-day moving average, but definitely seeing signs of institutional selling, not only in Altisource, but other names as well. NSM, Nation Star Mortgage Holdings. This is a company that is going to be reporting before the open tomorrow. And you can see how trading is starting to get very wild in Nation Star Mortgage Holdings. Down 8.5% today to 30.29. Earnings before the open. And Ocwen Financial, OCN, another mortgage service provider, still holding above its 50-day moving average, but big sellers in that stock recently as well. So be careful with these mortgage service providers, seeing signs of institutional selling. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon, folks.